Hello everybody, thank you for joining us today. My name is Derek, Director of Sales at Lightspeed Financial. I have with us today Dave Shine of Shine's Room, and he's going to be giving us a presentation today. So I'd like to thank you all for attending, and I'm going to hand it over to Dave at this time.
Test, test. Just want to test my microphone.
Dave,
make sure you guys could hear me okay.
We can hear you, Dave.
Okay, good. It's good level, everybody. Good level of sound. Type it in. As you guys know, we do our best to make these educational seminars as interactive as possible. As you know, I believe big believer in these things being an ongoing learning experience, as I've been learning over the past 15 years that I've been trading. And so these things, these seminars should be an ongoing interactive seminar educational process, and you know, I'm thrilled to be here to do so. So first, I'd like to thank Derek and the entire Lightspeed organization once again for giving myself and Shine's Trading Room the opportunity to pass on some of our knowledge and some of my experience that I've gained and utilized to capitalize over the past 15 years in the market. I'm excited to get another chance to present in front of this valuable and large community of traders and market participants. As I said, I strongly feel these seminars are a valuable component to a trader's success. Trader education is an ongoing process, and traders need to be able to be flexible and adapt to ever-changing market conditions. You guys can only imagine the amount of traders that I've seen come in and out of this business and in and out of the different market conditions. You know, as probably Derek and much of the Lightspeed team can attest to, is you know, people who adapt in different market conditions get to continue to do this beautiful business and participate in the markets on a daily basis, and be able to, as some of you guys probably do, wear shorts and t-shirt and sitting in your basement somewhere in your underwear. And I know it's not a visual that everybody wants to hear or talk about, but it's true. You guys, you know, as traders, people get to have the luxury of trading in any conditions, in any markets, from wherever they want. Now with the advancements of electronic trading and technology, there are no boundaries. You know, we have participants in Shine's Trading Room, which is a live trading broadcast we do every day interactively. We have participants from all over the globe. And people hop in just like they're sitting with me on Wall Street or New York City or wherever you know, I sit. They get to sit with myself and my team, and I think it's a tremendous value on the ongoing learning basis in the markets. So I'm going to hop into some of my strategies, some of the ideas, some of the things that I look at on a daily basis, go into some detail. I want to, you know, hop right into the meat of the seminar and try to pass on as much knowledge again as possible. I want you guys to, again, interact. Please ask questions throughout the seminar. I prefer for you guys to do that than just save them to the end. And Derek, feel free to stop me with any of those questions or to save them for any opportune time.
Absolutely, Dave.
Okay, so let's get right into it, guys. This is slide number 1. What are you doing pre-market? Okay, I know that there's a lot of prep that goes into it. I know that I myself at times prepare thoroughly pre-market. Other times, if I don't get a chance or if traffic's bad and I get to the market to the office a little bit late, I end up not being as prepared as I would be if I had that time to prepare and get my game plan in order. How many people have gone through that before, where you have your game plan strategized, but you don't get there in time, or you have a problem where your coffee's run out and you have to go out to Starbucks, and there's been an issue that way, and I want to get back to the basics as we always do, and we try to reformulate your foundation in trading. So what are you doing pre-market? Are you following the rules? Are you using them as a checklist? And what most people, what I like for people to do, traders, whether it be novice or more advanced, I like for traders to get on and to make themselves a checklist in the morning. Okay, hopefully that's a little bit better centered. So in the morning, make yourself a checklist, okay? Write down, hey, what am I looking at? What stocks are we talking about? Here, again, in Shine's Trading Room, we prepare something called the morning cheat sheet, and on the cheat sheet, we talk about strong names, weak names, ideas for the day, concepts, things that are standing out in our eyes and our minds. It gives you an area to focus on your trades. Something for me where I focus, my attention goes to keeping stocks in play that have a certain amount of volume, a certain amount of volatility, and definitely a certain amount of liquidity. Okay, if you're a trader, those things are important for you to have. If you're a long-term investor, and many of you guys might be that, that's not as important that one day as the next day you might have more volume and more volatility. For me, I like to create alpha. We call it alpha because we create it on a daily basis. When I was a partner in a hedge fund, they brought me into the hedge fund to create alpha, to make money on a daily basis, to find the opportunity and to seize the opportunity that day. Not, 6 months from now or 2.5 years from now or 5 years from now, seize the opportunity in the short term. I myself I am a diversified trader, and I'll trade short term, medium term, and long term. And I also trade options, equity options, and hopefully we'll have time to get to that later on in this seminar and talk about some of my strategies that I'm looking at in the options market. So we're identifying pre-market levels. Just going back to the importance of pre-market levels. A recent graduate of our educational course, she focused on the pre-market levels, where she was putting down her bids and her stops at the same time once the market opened. Same thing on the short side. She's putting in her short levels and her stops above that, based upon pre-market levels. So once again, as you guys know, and if you're not familiar with it, get familiar with the Lightspeed software. You have the ability on the Lightspeed software to put in buys or bids and stops at the same time. So if a stock's going to get down to your level, for argument's sake, $25, and you want to buy it at $25.01, you can also put in a bid to buy $25.01, and you can put in a stop below $25. This is what this trader did, and she found tremendous success in identifying those levels early. She didn't wait till the market opens and say, hey, this is as low as the stock goes since the open. She was looking at the pre-market to give her an extra level of confidence in those areas of entries and exits. You guys with me so far on that? So that's an important factor to identify how far a stock has gone pre-market, how high it's gone pre-market, is it strong pre-market, or is it weak pre-market, and where am I going to go get long and where am I going to get short, and most important, how am I going to protect myself once I enter that position? How many of you guys, and type it in, how many of you guys use stops? And I know there are a bunch of you right now that are saying, no, I really wanted to get to using stops, and I'm not sure which key it is, and I thought about it, but I don't really get to it. How many of you use stops? Type it in, please.
We're getting a few yeses here and a few no's also. It's
okay, good.
One, well, I try, but it's hard. I always get stopped out, and then a few no's and mostly no's.
Okay, perfect. I appreciate that, and that's for another lesson on how to avoid getting stopped out. Sometimes I call it a blip trade, and I hate getting blipped out. One way to protect yourself from getting stopped out is to enter your position a little bit better, a little bit more staggered in a way. And this is a whole nother lesson again, but it's the 1-1-3-5 methodology and some sort of order of those, and that's building a position towards the bottom part of the range, where instead of you getting stopped out and having to exit your position, you're actually building your position at the best price of that pull-in. And that's to the long side, obviously. But I do highly recommend for people to explore using stops in their positions. I always love the fact to be able to keep ammo in my tank. I don't want to spend all my ammo and then later on a trade pops up and that was going to be my trade, but I have no ammo left. So I do highly recommend getting stopped out small, losing small, and then being able to knock the cover off the ball. And that's, reflects on my statistics going back to 1998. And there are times where I take small, 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 and then knock the cover off the ball. And believe me, when you knock the cover off the ball, you don't even feel the small losses that you took on those small stops. So I would recommend focusing on that. Obviously, you could contact Derek and Lightspeed and Chris over at Lightspeed to also focus on getting those keys set up for you properly. Use all the tools and all the weapons at your disposal. What sectors do you look at? What stocks do you look at in the morning? Again, focus on the ones that are in play. If you're a shorter-term trader, focus on the ones that have the volatility, the liquidity, and the right amount of volume for you to get in and out using that volatility and liquidity in a proper risk-reward setup. Okay, for me, I find the stronger names, I find the weaker names, I find the weaker sectors, I find the stronger sectors, I focus on those sectors, and that's going to get in to one of our next lessons. But that's what I'm looking at pre-market. I identify it, I do my homework, I put that on my screen. I don't just hop in and tell the market what to do. I wait for the market to tell me what to do. Do you consider price history? And what type of trader are you? So you consider price history, so you're looking about, I don't know, 6 to 9 months back on a chart, and you say, oh, this stock got down to this level 9 months ago, and I think it's a critical level for me. But how to trade the last 2-3 days? How to trade the last 5 days, the last 14 days? And you have to, I feel, for me, I look to compare different time frames, and I use the time frame that's closely related to that trade or that time frame on my P&L or on my portfolio, and I'm saying, hey, I'm doing this trade or I'm buying this stock for the short term. I'm looking at a shorter term trade. I could also use a second level of chart to look at and analyze, and then a third or fourth and fifth level to add to that. But believe me, you could have a stock that's been strong overall and be weak today. You could have stock that's weak overall and be strong that day. So really focus on what your time frame is on the trade. Again, identify your time frames. Make sure you're adding all these to your checklist. You guys are welcome to take this and put this down on a little piece of paper. I've seen people write some of these lessons down on their hand on a little crib note sheet to attach to their computer, so they're identifying each trade, making sure they go over this list of rules before they open on it, before they turn on their screen in the morning. What type of trader are you? Okay, I think it's probably rule number 1. If I had to say, well, I don't know if I go that extreme, but identify what type of trader you are. What's your time frame? Okay? Keep to your time frame on that trade. The amount of times, again, I've seen traders do such a negative trade when they buy a stock, they want to make 20 cents to the upside. The next thing I know, they're holding it against them for $1, and it's 3 days later. So what they did is they wanted to make a short-term trade, gain to the upside for 20 cents, but now it's against them and they're down $1 and they continue to hold. And I feel like I want to say that it's the worst thing for a person to take a short-term prospect and turn it into a long-term loser. And that's how passionate I am about that type of trade. I'd even go as far as saying, don't ever change your time frame on a position unless one thing happens. Unless you're winning in that position. Unless you're up in that position, then you could extend your time frame and turning into a big winning position. Again, and you guys are with me on that, right? You understand where I'm coming from. You never change your time frame on a trade. So if you have a time frame, hey, I think this thing's going to move over the next 2 hours to the upside. Instead, now 4 days later, you're holding something to the downside. So you had a 2-hour time frame on that trade, and you never change that 2-hour time frame to be a longer-term investment, as we call it. Sometimes you see traders where they go from, hey, I'm just putting on this trade, I think it's going to go higher, and next thing you know, they're an investor in the company. And we never change that time frame. We never change our parameters unless we have a winning position to the upside. For example, and we'll probably get to a chart, at least hopefully we'll get to a chart of MBI recently, and it goes to an options trade, but long-term bullish. I was on the trade on the name. I hopped on the trade, and I took a short-term chop that I wanted to make on the trade, and I turned it into a long-term growth position. So you could do that to the upside if you're winning or if you're up on the trade, but according to my rules, you never change a short-term strategy to the upside into a long-term loser or investment to the downside. And remember that. You guys with me so far? Any questions or comments so far?
So far, pretty good, Dave. No questions yet. Okay, great. So let's move on. As a ton more concepts to address. Okay, again. Do you compare different time frames? Load up your beautiful Lightspeed charts. Have a few of them open. Take
a look at different time frames. And remember, your investment or your trade should reflect on the time frame that you're looking at on the chart, and then use the other ones as less of a force on your trade, especially if it's shorter term, but still you can look at them and use that for your extra advantage. Create a trading strategy and game plan according to what the market shows you. How many of you guys have come in every day and say, man, this market has run so far, I'm definitely going to short everything today? Meanwhile, you have a strong market. The market goes higher and continues to go higher and goes higher, and it's painting you a picture, but yet you're sitting there trying to go against the grain. No way, guys. Correct yourself today. Start over today. Be fresh today. You are a new trader. You are christened a new trader, as you are you've been knighted now. You've been taught that we're not doing that anymore. Okay, we're going with what the market shows us. Today's a strong day. I'm going strong, going to the long side, learning how to perfect my entries and my exits. Same thing on the short side. I'm shorting this day because it's a weak day, and I'm going to find the names specifically on which ones to handle during this type of day. What time do you start trading? Guys, what time do you start trading? And you can type it in. It's very important to realize. Derek, what times do we see up there?
9:30, 6 a.m., 9:41. A couple random times here.
The guy at in the 9:41 is probably closest to my methodology, and I see obviously there are different types of traders out there in the world. If you're a novice trader, I recommend for people to start at about 9:42 the earliest, 9:41 the earliest. During the first 10 minutes, you end up getting whippy moves without having the ability to control them and without being able to control your risk reward. That's my philosophy on a newer trader. Obviously, there are people who trade pre-market and post-market. Some of my best trades ever made pre and post market. One day I remember making 100 points in Google after the close. 100 points in Google in one day after the close. So obviously there's a ton of money to be made. It's not for the novice and it's not for the faint of heart. And make sure that you're in that level of risk tolerance and you fit that criteria. Are you in control? Just remember that. Put that down on a piece of paper. You could say as much as you want that you're trading a stock well, but make sure you're trading it well and it reflects on your P&L, on your profit and loss. Not that you're trading it well, but you've lost every day on trading Apple. The amount of people I see these days trying to trade Apple, and man, I'm great at trading Apple. Next thing you know, you look at your daily, your weekly, your monthly, your sheets, and see if you're actually trading Apple well or if it's trading you. Don't overcomplicate your trading strategies with giant crossover MACDs, moving averages when it meets a certain crossover point and then it hits something else. So keep it focused, keep it simple, and just stay focused on your trading strategy and game plan for the day. Hopefully that gave you a little bit of a checklist to watch. The flow of smart money. And this is one of the early focuses in my career. One of the early focuses in this seminar is the flow of smart money. I always say, for me, for myself, for my trading, I always want to go where the smart money's going. And I've seen it over the past 15 years, and I guess that's why I'm giving this seminar as opposed to, sometimes people like, hey, I'd like to teach you, but I'm, I've been trading for 6 months or a year and a half and so on. From my experience, this smart money over the last decade and a half has always been the safer place for me to put my money. Okay, so the smart money goes where the market paints the picture for you instead of you trying to impose your will onto the market. Okay, so when your smart money is going into one name versus another name, or going into one sector versus another sector, we're going to get to some charts to talk about how they correlate and also how they also veer away from each other at times. It's so important to find where the smart money's going. Just looking at even the market today, you have BlackBerry again, RIM. With the new name BlackBerry, was the weakest name all day, at least the ones that I was looking at. Continue to pushing out to the downside, a huge move to the downside, and continues to show weakness in that space. Again, the market painted that picture for me. Okay, I don't want to create what that stock is going to do. I want the market to say, hey, I'm looking at my screen, and this is the weakest one on my screen. So what am I going to do? I'm going to go short the weakest. I'm going to go long the strongest. Let's get into the Shine 5 and 5 strategy. It's as simple as you could get, people. It's self-explanatory. whether preparing for earnings, anticipating a Fed report, preparing for any opportune moment in the marketplace. It could even be the open. It could be lunchtime. It could be, when the Fed comes out with a rate decision. It could even be natural or current events that are happening out there in the world, business-wise. I always have in my mind the 5 strongest ones, the 5 weakest ones, and I stick with those. So that's the 5 and 5. So now for you guys out there, tomorrow morning you turn on your screen, I'm looking at the 5 strongest, the 5 weakest, and I'm watching their performance. And for me, what I do is I do my best to stick with the strongest names and stick with the weakest names and head on that side only. So once again, this is just a clip of my market sorters, and you can add a bunch of these on your Lightspeed platform. These are my market sorters. I typed in any 20 stocks. I believe this was yesterday, and no, this was a while back, a couple of days back. And if you see here, I have a bunch of names to the top part of the list, a bunch of names to the bottom part of the list. That's my area of focus, and it couldn't be any simpler. You go on the right-hand side, I believe that these are retail names. There's certain names that are strong on the right-hand side and certain names that are weak on the right-hand side in that space. For now on, my philosophy says that I buy the strong ones, I short the weak ones, and the reason is because that's where the smart money goes. Okay, I see sector rotation, I see name rotation, I see specific stock rotation. So they come out of one name and they put into another one. They buy a certain name and they start selling the other name. I've seen this philosophy. I remember I had traders show me their screen. They had 100 positions in the morning. The best performers and the worst performers, they flowed into that direction. They kept those positions. They let their winners work for them. They got rid of anything that wasn't working for them. And then lo and behold, the strong stocks continued to rally through. The weak stocks continued to pull in. I remember going back to the late 90s, there was some of these biotech names. Biotech names at that point were a very hot item. I bought about 4,000 shares of stock. I made maybe 6 quick points, about $24,000. It was about, I don't know, 9:45 in the morning, shut off my screen, and went home for the rest of the day. By the time I drove home, I got back I turned on my system, or I turned on one of the media platforms, and I look at the name that I had, and I believe it was either PDLI or MLNM, and I made 6 points or 24,000. The stock was up another, I don't know, $22. And yeah, sure, I left about $90,000 on the table, and the only reason was because I didn't let my winner work to the upside. At the same time in those names, you had people who were saying, oh, this stock Millennium or PDLI is up enough. And how many times you guys found yourself in that situation saying, this stock is up enough, at which I have no idea why people say that would happen. But this stock is up enough, and now I'm going to start shorting it. Next thing you know, the strongest stocks finish stronger and end up at highs of the day. The weakest stocks go lower, finish lower, and end up at the lows of the day. Please be on the right side of the smart money flow and the smart money of where the strong names go and the weak names go. Go back to your screen. Keep your diary at the end of the day. Go back to your screen at the end of the day and see how you've done. Check it out on your platform of your diary, on the platform. If you would have bought, if you could have bought, if you should have bought, if you did buy, how'd your stronger name do, how'd your weaker name do? People always look for exact clarity on what a guy like Shine does, and I keep it as simple as possible. And I head in that direction. For the next lesson is how do we enter and exit these, which is the second stage of educating these strategies. But it's a no-brainer. In my position over time, it's a no-brainer. Short-term, medium-term, long-term, same thing. That's the crazy part about it. It works in all different time frames. Always be prepared for a rally or a pull-in. Okay, you don't know what's going to happen when that opportunity pops its head up. You don't know what's going to happen when the Fed comes out, or when a company announces, or when somebody declares bankruptcy, or there's the amount of times I've seen rumors in certain spaces. And I remember there was one day in one of the airline names. I believe, if I'm not mistaken, it was Continental at that time, which is not an independent company anymore. But it's Continental or American, I think it was Continental, and somebody said there were bankruptcy rumors. The stock pulled in $5, $6, $7 really quickly. I looked at all the different comps in the space and the areas. I had in my mind already what I was going to do in certain names at certain times in certain markets. If this happens, are you prepared? We've taught so many times people of understanding that trading is like a chess game or a poker game. And in chess, if you're only thinking about your next move, you're dead. You're never going to be a good chess player. But if you're thinking in chess or checkers or poker, if the next player does this, then I'm going to do this, but then they may do that, which then I'm going to get a checkmate. That's what I'm looking at all the time in the marketplace. I'm waiting for something to happen. I'm waiting for the banks. I'm waiting for the solar names. I'm waiting for the tech names. I'm waiting for certain things to happen, anomalies to happen in the marketplace. 2008 was a great trading year for me. Most people were in the dark. And that's when people had the worst performances. Great trading year for me because I was ready. I was sitting by my keyboard. I was sitting there ready to knock the cover off the ball, and it popped its head up. I saw, as people compare it to baseball. I was watching the pitch and the ball coming down the middle of the plate, and it looked like it was in slow motion. The reason was because I was anticipating a fastball, and I ended up getting a fastball, and I knocked it out of the park. You guys have to understand the psychology behind being prepared for the next move, and this is how you're looking at now. Color-coded, plus and minus coded, stacked from top to bottom coded. We could not make it easier for you guys to be able to take advantage of. Again, this is just a directional move with these names, showing the strongest, showing the weakest ones in certain areas, in certain space, in certain watch lists. Again, why is it important to keep 5 strong names and 5 weak names? This is me again, right? And people may disagree, but I guess the proof is in the pudding. I want to be long the relatively strong names and short the relatively weak names. Period. Okay, so that's a staple in my arsenal. If you guys ever see me long the weakest name, knock me off my chair, and I try to catch myself all the time. And believe me, they're going to paint a picture that looks so tempting for you guys. Man, this stock has just gone down so much, and it's not going any lower. And man, listen, the weak ones stay weak, the strong ones stay strong. That's my philosophy. Here's the time where usually people hop in and say they try to bust me, Shine, but what happens when? So usually the question is, Shine, what happens when a stock reverses? Okay. Again, we go back to our basic defense. Our basic defense comes in using stops. Our basic defense comes in patterns. Okay, so if you're wrong and you think that this stock is the weakest one and you're not getting the right position, the right spot, how do you protect yourself? Using stops and using patterns. The patterns is if I'm wrong 2 or 3 times, I move on to a different name, a different trade, or I go get a cup of coffee. It's that simple. Okay, just want to go show some of these charts. Again, I did not create these. I just clipped them off the Lightspeed. So a theory of relative strength and weakness, and again, this is multiple time frames. You're not going to even be able to tell, except for the numbers on the bottom, what time frames. This is yesterday. This is the Qs over the DIA. The diamonds is the Dow. Yesterday, I identified weakness in the Dow, more strength in the Qs. This is what the chart looked like throughout the day. When one got stronger, the other one, if a name got stronger, it was relatively strong. If the other one got weak, it became relatively weak. There's something called pairs trading where people put on pairs and they trade these two, one to the long side, one to the short side. In this scenario, it's very effective. Look how effective that is. One name becomes the weaker one, and the other one becomes the standout stronger name. It was actually, if I'm not mistaken, it was actually reversed today. Today, the Dow was down, and the comp was up. Of course, you guys correct me if I'm wrong on that. Again, this is Zynga versus LinkedIn, and Zynga's on the bottom in red, and LinkedIn just staying firm, even a little bit of a downtrend with Zynga pulling in, and one of the biggest downward moves yesterday. Here at 11. not sure if you guys could see my mouse, but here at about 11, let's start at 9:42 again, where people, the novice or the beginner trader, again, short of a weak stock on a rally, a total capitulation. Again, they give you one last opportunity. I did not make this chart up. Short again the rally in the weak stock in the weak market with a continued downtrend for the rest of the day, outweighing the rest of the market, outweighing another social media name in LinkedIn, and continue to push out, showing relative weakness again. You guys with me so far on that? I did not make these charts up. They are the ones from the marketplace. I expanded to a longer term chart, and this does go back a couple of days, but literally like probably 2-3 days. This is a Google versus Apple chart. Okay, if some of you guys are members of Shine's Trading Room already, this is a clear depiction of something we talked about, with Apple showing relative weakness and Google showing relative strength. These are the type of scenarios we try to point out on a daily basis to identify it, as I feel there's a motto of you just can't do it alone, and we focus on being able to get different items of ideas and value from outside to create the ultimate trading experience and ultimate trading environment. So here is a perfect example of something we talked about, we reflected on, the divergence of Google and Apple during the last time period, the last two months or so, 2.5 months. It started, I believe it was maybe the end of November, and it was a time period where they started talking about margin issues, which is for a different conversation in Apple, and it's a widely held name, and continued to show weakness, with Google then showing strength and going back to its all-time highs or 52-week highs on its way to potentially, and I put it out, this is my own philosophy, and I do not make any recommendations in any way, but I think Google gets to 1,000 before Apple does, and I just see it in this chart pushing out to the upside on one, and Apple's trying to struggle to stay in there. At the same time, and this is for a different conversation that we have almost on a daily basis in Shine's Trading Room, we talk about Apple and selling, I don't know what it was, 48 million units of something at $800 a unit, and still disappointing people. Explain how that's possible, I'm not sure, but that's what the chart reflects. And you have continued relative weakness in this name as Google is outpacing to the upside. And it's a great divergence that you see at the end of November in this chart, and continued weakness from there. Derek, did you have a question that you wanted to ask?
No, right now, no questions. Just some platform questions that I'm answering in the chat.
Okay, guys, please feel free. I do think this is a valuable time to ask a question. You can even talk about your own philosophy and your own strategy and what's going on your screen, if you're trading well or you're trading poorly, where your strengths are, where your weaknesses are. We've been known to help people fix up their strategy and find little weaknesses in what they're doing wrong in order to get back on the right track, and that's why we're here to repair and share our knowledge. It's great to see that our seminars continue to grow as we speak. So, guys, thank you for continuing to spread the word. RDN versus MBI. These guys are mortgage insurers. These are mortgage insurers. This over the past couple weeks again. This is MBI breaking out to the upside, is a name, once again, that I talked about, that I focused on, that I put on position-wise, breaking out to the upside and continuing. This only shows at $8. I believe the stock's at $10.50 right now. So MBI outpacing RDN, appear in the space, similar price range on the name, underperforming, and a straight outperformance in MBI and RDN. Guys, after this conversation, which one are you more apt to take a look at to the long side? Let's go. Shake out those fingers, guys. Stand it up. Shake it out. Make sure you guys are stretched. Type in. Which one are you more apt to buy now? Yes, I'm quizzing you. Which one are you more apt to buy? Usually the answer is RDN, because if the laggard is definitely going to catch up, and there's one philosophy of the sympathy play. Over my career, I've seen the sympathy play not work as much as the strong one. And you say to yourself, hey, if I would have bought all the phone makers, or if I would have bought Apple, which one would have outperformed? So you could buy some of the other phone makers, but none of them went up as much as Apple did. So it's just an area, or search engines, Yahoo versus Google, and so on. Let's start getting into the habit of focusing on the stronger one, or the leader in the space that continues to follow through to the upside. Okay.
So, Dave, I just got
Yep.
a little bit of variety with the RDN versus the MBI with the answers there, but also one of the questions that came in was, do you prefer to limit into these trades or market into them?
It's a good question, and you know, one of the classes that we also give when we give our intensive educational course is that we talk about sort of tricks of the trade and different keystrokes to get in and out and so on. It depends again on my time frame. If I have the idea that in the next half hour or next hour or next 4 hours that I think that I'm going to be able to make, I don't know, on an MBI 50 cents, for argument's sake, which is a 5% move on a $10 stock, then why would I be focused on my 1 penny to get in and to get out of, and I may miss that opportunity of the 50 cents to the upside. At the same time, as we know, and especially entering the professional trading realm, we know that there's not only a commission advantage by bidding for stock on a limit order, but there's also a making the spread or playing market maker advantage, which allows you to capitalize on the spread between the bid and the offer. And even one more thing, it's to capitalize on the range. So when I like to enter a trade, I like to enter a trade to the long side, buying a stock when there's selling momentum. And I know that's crazy, but I like to buy stocks when there's selling momentum, and I like to sell stocks when there's buying momentum. So I'm buying stock when there's selling momentum towards the bottom part of the range in a strong name like MBI. And I'll give you an exact example. MBI, I traded the stock at the $8.50 level, and then waiting for it to pull back to the $8 level, which it did multiple times, to rally up again to the $8.50 level to pull back into the $8 level. And you can't see it on this chart, but if you reflect on your current chart in front of you, and this is these are the numbers I think on RDN. More focused on the right-hand side in the column, but MBI did an $8.50 to an $8 pull-in and rally multiple times, and maybe we have one of those charts coming up. So I do a combination. I'd say I do a combination of both, but I like to be sitting there on the bid. You get a tremendous advantage, and in the amount of volume that I've done over my career, it's a huge advantage to make money on the spread, to make money on the commission advantage, and to make money on the bottom part of the range. So I don't want to take too much time on that, but thank you so much for the question, guys. Let's continue to have those come in. Here's a Zynga versus a Groupon. Okay, and I know this is crazy because Zynga also became a stronger name recently. And just over the past maybe 24 to 48 hours, Zynga became the weaker name, and Groupon then outpaced to the upside. And this is also going back a little while. Here's a very interesting, clear picture, and this is for maybe a little more of the longer-term trader, because people may say, oh, Sean, you're a shorter-term guy, which I mostly am, but I will also have my positions for longer-term trades, as I have multiple accounts and multiple trading styles. But here's a pace over the past, and it looks about 6 months or so, of 3 different names. One is the SPY, which is a reflection of the market overall, the S&P. The second one is the XLF, which is the ETF for the banks. And the third one is Bank of America. How do we like how this thing looks, guys? Look at the outpacing of Bank of America, doubling and tripling, or 2.5 times during this time period, making new 52-week highs today. Just today alone, making 52-week highs on February 13th, 2013, and it's a perfect example of what we're talking about right now today in this lesson. So look at that outpacing. You go over to specific names in the bank space, outpacing the market, and that's showing relative strength and sticking to the relative strength. Here's a LinkedIn versus Facebook. Man, interesting arbitrage right there. Interesting pair. Interesting outperformance in LinkedIn over the past couple of days. You know, again, a $95 stock when we start talking about LinkedIn outperforming as Facebook pulls in during the same time period and rallying back up and then pulling in, and LinkedIn holding strength. Squeeze on the short squeeze, referring to a short squeeze, breaking out new 52-week highs and gone off the page. The LinkedIn-Facebook comparison is another long conversation, deeper conversation, and you know, probably for a different lesson or a different seminar. But you know, 2 interesting business models and two areas of growth. But definitely one outshining the other. No pun intended. Okay, so I wanted to talk about this for a second. I wanted to talk about overnights, equities versus other options. Derek, how we doing on time?
Doing great. Keep it coming.
Okay. Okay, great. So I'm going to spend a couple minutes talking about this because there are some very important examples to reflect on. And, again, I do give a detailed options seminar personally, and I do recommend these days especially to focus and to be able to look at the options market. It is a whole new tool for you to be able to use, whether it be for hedging, whether it be to give you insight into stocks movement. Personally, right now, I feel that there's a great edge for the trader, for the focused trader, for the disciplined trader in the options market. At times, options will allow for you to define your risk reward even without you defining it or using a stop and so on. You just, when you're purchasing a call or a put, you are limited to lose only the amount that you purchase that for. Plus, now you get the ability to hold overnight stock in the options market. So an option reflects the underlying stock, obviously, whether it be a call, which is a bullish bet, or buying the call is a bullish bet, or buying a put, which is a bearish bet. But this is an overnight position. I also had another trader who came in to take some education and to get consultation on some of their strategies. And I looked at that person, and that person seemed to always be right about 3 days later. So they put on a trade. They lose some money during the trade itself during that one day. But 3 days later, their stock, their candlestick setup, their chart setup would end up coming to fruition. Well, that person had to become an options trader. They needed to have the ability to hold a stock, hold a position for 3-4 days, be able to define their amount of risk, mount their loss, and then be able to capitalize when the stock worked. And it was a remarkable accomplishment to be able to morph into that type of trade and be able to hold that position overnight through the options market, and not through the stock market, where you may have a different type of exposure, but at times greater exposure. Lightspeed, again, another good plug, is that they do have a ever-evolving great options platform that I do utilize myself also, and it's something that you guys should check out. Do you feel comfortable taking home stock, both long and short? At times people always have that fear, how am I going to take home stock, long and short? Well, once again, you have the option to buy either a call or a put, or hedge your position with a call or a put. Options are very flexible in what you could do with them, but if you're long a stock and you buy a put, your position is more protected, I should say. It's protected, but definitely more protected than you would if you just own the stock, or if you're short stock, you then buy a call to protect your short in case the stock gets taken out overnight, which a lot of people always fear, or if the stock, I remember I once was short a stock, one of my worst days, short a stock that cured cancer. You never want to hear those two words. Either stock gets bought out or the stock cures cancer, and the stock rallied up. Obviously, I ended up, making back anything that I lost in that trade. And the stock actually, I think ultimately they did not cure cancer, but that position, you never want to be short that stock that does that or that gets taken over. This is a way to protect yourself. You put on a short position, you might consider to have a hedge by going long a call. If you put on a long position, you might want to put on a hedge by buying a put. Have you looked into the options market to help you sleep better at night? And you say, man, I have a totally exposed position. I'm really afraid because they may have earnings, they may have announcement. You come in the next day and you're either beat up or you're making money to the, to your side, to your advantage, but you can't sleep at night. Options for me is a way that I get to focus and sleep better at night when I want to take longer-term positions and want to be less exposed. Have you ever wanted to be a landlord? And I know it sounds like a weird question in the middle of my intro to options piece right here, and obviously we could get totally detailed, and we're going to go on for another 5 minutes or so. But have you ever wanted to be a landlord? And when I talk about being a landlord, this is in the options market. This is selling premium. This is selling an option to somebody else who's buying it, because you say to yourself, there's no chance of that stock getting either up to that level or down to that level, and I'm going to sell somebody an option which will either get them short at that level, make me long at that level if I'm selling a put, or selling a call, which would get the opposite, where I would be then short at that level and they would be long, and I'm selling them a contract. And that's what an option is. It's a contract. It's an underlying it's a contract on underlying stock, whether a bullish or bearish bet. long stock versus selling puts. Have you ever said to yourself, hey, I'm going to buy this stock here, or I could sell a put, and understand what that means to sell that put? And once again, you have to be totally qualified to enter into certain realms of the options market. But have you ever thought about that? Maybe I shouldn't buy this stock, but maybe I should sell a put. So either I'll get put stock at the price that I want, or I just collect rent like a landlord. Have I ever thought to myself, hey, maybe I shouldn't short this stock. I will sell some calls because I don't think the stock's getting above that level. I either have two choices. Either I'm getting short at the level that I really want to get short at, or I get to just collect a premium. And again, another way to do it, and this might be advanced for most people, or for some people, you protect yourself by using spreads. So you sell a call spread or you sell a put spread, as opposed to being naked selling calls and selling puts. Okay. Cover call we'll get into the next time we speak, if Lightspeed would be so kind as to have me back. But an example is an MBI trade. Let's move on to some quick charts here. Just some 4 names that I just focused on that I wanted to take a look at some of the options montage along with the stock. Here you have BlackBerry. Last week it was called RIM, but it wasn't performing on the RIM, so they decided to change the name. Here is the change of the name at $12, and the stock rallied up to 17 on that, so it was a pretty nice accomplishment for changing the name. But when you talk about the options market, you talk about these are our March calls, or March 1 calls, and I just calls and puts. On the left-hand side you have the calls, on the right-hand side you have the puts. This is the way these work, and these increased in value today. On the right-hand side is the bid and the offer, works the same way as the stock, and here's the amount that they increased. These puts increased, and guess what? The calls decreased, and it's because today the stock was down in a big way. Okay. I'd like to address the part of you could either try to short a name like BlackBerry, or you have the ability to buy puts in the name to bet that the stock's going to go lower. And right here I made some money the day after the announcement came out, or the unveiling of BB10, made some money short by buying puts. And then again, there's another opportunity up here at $17. For the more advanced trader, and once again, you need to be qualified to do so, you have the ability also to sell calls or sell call spreads up here towards the top part of the range, which I did too. So remember, you have those 2 opportunities. Again, down here at the $12 level, you have the opportunity to not only buy calls. If you're bullish, you can only lose the amount that you invest in those calls. As a disclaimer, again, most calls and puts do expire worthless as far as specific strikes go, but you also have the ability to sell puts or sell put spreads on the same name if you are bullish the name. It's just a chart along with a montage from the Lightspeed options platform. Here's another one also. You have Apple. Apple over a certain amount of time period. What's funny or interesting, if you look at Apple in here, you see both the puts and the calls actually both down for the day. And these are the Feb 16s that I put in there. That's for this week. Why is that? Somebody answer. Why is that? Why is the, I don't know, 465s, both the calls and the puts are both down for the day? Anybody? We get an answer on that.
Nothing, Dave.
Come on, guys. Stay with me. Stay with me. Focus. You know the answer. The answer is because the stock stayed flat. The stock was relatively flat today compared to the rest of the market, and what came out of it was premium on both sides. So you have a volatile name that didn't go anywhere and basically sucked out premium from both sides. If you were long either the puts or the calls, if you bought the puts or the calls, you would then lose on both of them. If you sold either the puts or the calls, then you would be profitable and bringing in rent. And the crazy part is the stock didn't move, but you'd be profitable on it. You pay premium buying calls and puts. Why? Because you have unlimited upside. I hope I'm not getting too advanced back then on selling calls and put spreads. It's usually left for one of my more advanced lessons, which I'd like to get into next time. But you buy a call, you're betting that a stock is going to go up, and the only amount you can lose, the amount you paid for it, but it's representative of being that stock. 100 shares per contract of that stock. So for argument's sake, if you bought the $30 calls in Facebook, and the stock went to $35, you'd be long 100 shares of stock at $35. You'd make $5, you'd be $5 in the money, minus the amount that you paid for the premium on that $30 call. Okay, and that's all you could lose is the premium. If the stock goes to 35 or 40 or 50 or 60, you'd make all $30, okay? And that's where the upside of buying calls and puts are, is you make the entire money because it's representative of being long or short at that strike. The last thing that I'm going to get to, and maybe I'll show you one or two other charts very quickly. Collect premium is selling calls and puts. Why? You have limited upside because you can only make the amount that you collected on that premium, but you have unlimited downside, which I know sounds unattractive, and we could address that again next time. I just want to go to a couple more quick charts as it's important to see. Again, Decker's, once again, a follow-through to the upside in this chart, a strong name, pull in, strong name, pull in, strong name, rally, pull in, rally, and so on. One way that I played this name is I did sell puts in Decker's instead of going long the name, and I did go long calls also, or buy calls also, to be able to take a strong name that I felt I would have two ways making money. One is to collect the premium on the puts that I sold, and the other one is to have a call or a long bias and buy the calls in it, and the stock obviously continue to rally through. So multiple ways of getting long and short. This is BKS, and I went back a couple of years. This is BKS is Barnes & Noble's. Again, not being able to get above 20 multiple times. I'm going to ask you guys one last question, and then I'm going to wrap up this concept. My question is for you, now that you learned to drop about options, when the stock gets up to 20, what are your options to do? What can you do to reflect on this name? What are your choices in the options market? Obviously, I have many, but I'll take a couple from you guys.
I'm getting buy a put.
Good.
Sell the stock.
Good. That's perfect. That's fine. You could either sell the stock, you could short the stock, you could buy puts, or you could sell calls or sell call spreads. The people who did that on the last 10 rallies over the past couple of years, and we've talked about it before in Shine's Trading Room also, they gave you a tremendous opportunity, I believe, here in May 2012. I believe somebody came in, it might have been Microsoft giving them investment, but the stock continues to be Barnes & Noble's, and every rally has just been a shorting opportunity, and one way you could do it is short, another way is to buy puts, another way is to sell calls, and another way is to sell call spreads. So thank you for answering that, guys. I'm going to just wrap it up on that note. We get back to more deeper conversations, some of the other concepts, but I feel like we went a little bit over time. But I wanted to get as much in as possible. So once again, at this point, I'd like to take any questions or comments or feedback from you guys. Remember, it's much appreciated if you guys could give us feedback or questions or comments. And now's your opportunity, as generally cost. To be able to get this type of one-on-one interaction. Also, I'd like to offer for all of you guys who are on this broadcast a free month of ShinesTradingRoom.com. Shine's Trading Room. Go to ShinesTradingRoom.com. Click on the virtual trading floor. Click subscribe. Fill it out and use the code Lightspeed 1442. Again, Lightspeed 1442 as the coupon code. Okay, so that will get you guys one free month of Shine's Trading Room. You guys can see what the buzz is all about and experience what we experience on a daily basis. Derek, if there are no other questions, and I keep the floor open for questions, I'd like to again thank you for this chance. I'd like to thank all the people who joined us today, and I'd love to see you guys in Shine's Trading Room starting tomorrow.
Yeah, thank you very much, Dave, for doing the presentation. I'll also wait for some questions to come in, and I'll do a little bit of a wrap-up also. I definitely think that everyone should go and check out the trading room. I think there's some great features there, and I think it's a definite value add. So everyone, definitely check that out. Again, I want to thank Dave. Great job, great presentation. I want to thank everybody for attending. Really appreciate that. And one other thing that I just want to make note of is that please keep in mind this presentation is for informational purposes only. Nothing presented today should be construed as investment advice or recommendation by either Lightspeed or Shine's Room to buy, sell, or hold any specific securities. Since we don't know everyone's investment objectives or risk tolerance, we are not endorsing any specific trading strategies. Beyond that, I do not have any other questions. I just want to say that this webinar will be posted on our website in short order in case anybody else would like to review it or watch it again. And beyond that, I'd just like to thank everybody for attending, and again, extend my thanks to Dave for hosting this.